Hi Forex traders, this is Francis from Caris Trading Institute. In today's episode, I want to show you how our analysis on Monday played out on the dollar index and foreign currencies. We anticipated a possible bearish move on the dollar index and an opposing bullish move on foreign currencies. Kindly click on the subscription button and don't forget to hit on the notification bell so you stay updated every time I post a video. So guys, let's look at the weekly time frame as I show you what happened after we analyzed that the dollar index was trading into a sell side liquidity on Monday. Remember that on Monday we outlined these levels as the drawn liquidity and this level as 50% of the entire monthly range. We were anticipating that price should trade into a possible discount of that range, at least before we start seeing a possible buy side retracement. So we went to the daily time frame and we outlined specific levels. We said price had rejected off this volume imbalance and we were expecting price to take out this sell side liquidity and ultimately this sell side liquidity, and this is the drawn liquidity on the weekly time frame. Okay, and you can see it from the daily time frame, price actually played out as we analyzed. So let's go to the 1 hour and then let's see what we were expecting from a 1 hour perspective. Remember, on a 1 hour perspective we said we would be selling the dollar if it retraced into this range, this internal range liquidity, which was the fair value gap, although price traded into a deep premium and then lingered around this range for some time. This is called time distortion, and then price broke structure, shift of market structure, and retraced into another block that has a fair value gap, and then the dollar went straight into that sell side liquidity and is still heading into that weekly drawn liquidity. Remember, the higher time frames are the liquidity drivers. That is where the institutions place their orders. Okay, the higher time frame is the drawn liquidity, so the sell side liquidity on the higher time frame has higher probability of drawing price into those regions. Okay, so you will also wonder why price had to take a lot of time around this region. This is because the institutions were trying to blend time with price. There was an economic event, high impact event that came up yesterday, which was the CPI. So that was why price had to linger around this region for some time, and immediately the CPI came, it injected the liquidity that pushed price into this sell side liquidity. So let's look at GBP/USD and see what happened on GBP/USD. On the weekly time frame, remember we already outlined our drawn liquidity. On the weekly time frame, we were expecting price to trade into this fair value gap. It has another block, so this was our drawn liquidity on the weekly time frame. This is also called a sell side imbalance and a buy side inefficiency that is being rebalanced currently. Okay, possibly we may start to see a possible retracement into these inefficiencies or imbalances you see on the weekly, because this is an entire liquidity void, a one-sided delivery. I am seeing, because this is a liquidity void, a one-sided price delivery, the institutions will likely want to reprice this, okay, into these imbalances. There is a volume imbalance here and there is a sell side, there's a volume imbalance here and there is a buy side imbalance, sell side inefficiency. Okay, this volume imbalance is a type of fair value gap, but is a type of fair value gap that excludes the candle body in its delivery. Okay, if you look at this, you will notice this is a 3-candle price action, the high of this candle and the low of the third candle, but the body of the candle traded through that. But in this case, you will see that only the wicks were involved. The imbalance were created with the wicks without the candle body going through it. So this is volume imbalance, this is fair value gap. I'm trying to explain it as simple as possible. If you are struggling to understand fair value gaps or inefficiencies, I did a video on this channel. I would like you to go and watch it on fair value gap or imbalances so you understand clearly what that means. So then on the hourly time frame, we were anticipating to be buying once price retraces into this fair value, another block, price exactly traded into it, although it took some time. That is called time distortion, because there was an underlying high impact news on Tuesday, which was the CPI, and then we saw price give us a shift of market structure, retraced into the other block, and then price went exactly into that drawn liquidity of the weekly time frame. Price is still showing willingness to go up to take out this at least for another time. So guys, you see that our analysis played out. Henceforth, I'll wait to see what price is going to do. Remember, we are not chasing price, rather are we trying to predict what price is going to do. But we are going to allow price show us its price leg. Once we see that, then we position ourselves with the institutions. Guys, until next time, I wish you good luck, good trading.